Alrighty, happy Sunday, everybody. Welcome. It is Sunday, December 4th, 2016. We're almost at the end of 2016, almost into 2017. Thank you guys for all being here. If you guys are tuning in for your first time and you don't know me, my name is David Schinkel. I'm the CEO and founder of Positive Traders. And I do a free webinar every single Sunday to kind of go over all the pairs, kind of help you guys with a bias for the week, give you guys a couple setups, give you guys, some direction. So some clarity, essentially, it's where everybody's trading to, individually. So when you can trade, you can kind of collaborate and everybody can kind of give their opinions on things and analysis. That's what we do. So, guys, we're going to go ahead and do what I always do. We're going to look at the economic calendar first, check out the key risk events for this week. I'm just going to reload it. And then we're going to just go ahead and jump straight into the technical analysis, guys. All right. So this week is pretty light, not a whole lot in the beginning of the week. Okay. There are some, PMIs coming out. So keep in mind when those are happening. Couple news all week, right? Just all off and on. No real key risk event this week, guys. There's no, non-farm payrolls. There's no elections. There's no ADP. There's nothing, there's just your normal, they call this macroeconomics, right? All the macroeconomic news, macro events. So just a bunch of little tiny news that essentially give an overall direction for a currency. So we don't trade the news. We just stay aware of the news. All right. So let's go ahead. Let's jump right into the technical analysis, guys. Gold, guys, I'm still biased long-term down. I think gold still has some downside. You guys know that my long-term target is around the 1150 area before we start to buy. So I believe that, especially with the dollar going to be gaining some strength here, they're pricing in a rate. The markets are currently pricing in a rate hike right now. It's just about guaranteed that this month, actually in a couple weeks, guys, or maybe I need to check the calendar. I think it actually happens pretty soon, maybe within 2 weeks. They may be raising the interest rates. All right, and it's essentially guaranteed, guys. So that's going to be good. That's going to be good for the U.S. dollar up until the point, right? It doesn't necessarily mean right when they raise interest rates buy the dollar, but if the sentiment is that they're going to in December, then right now what you guys are seeing is the market's pricing in this hike. Gold, just to kind of go a little bit more in depth on gold. Let me zoom in, guys. I also don't have my mouse, guys, so I'm trying to zoom in, but it's not okay. There we go. There we go. So gold on the daily, guys, let's see where it closed at last week. Still very bearish. All right, let me take out my marker. Here's what we were talking about yesterday, guys. So we're in this downtrend. All right, I don't think we're going to start going back up yet. I think we're still going to move lower, but we do need to break below the 61.8% retracement level, which is right here, guys. I don't know why this doesn't want to. There we go. I'm going to have to click this today. So you guys can see on gold, right? Here's the 61.8% retracement level that we're working with right here. That's where we're seeing support on a technical level, all right, from a technical analysis side of things. So you guys can see the price right here next to the percentage, 1170.7. All right, so we need it to break through 1170 to become sellers again. All right, dollar index. Dollar index is still, I think it still has higher to go, guys. You guys know my long-term target on this pair is 103 at least. Okay, and you guys know on a long term, right, if we really, really pull this chart out, the reason why is because we've had this giant, on a technical level, right, technical analysis, we've this ginormous bull flag, pennant, whatever you want to call it, right, that we've been working on for almost 2 years now. All right. So we're breaking out of it. This is the top. You guys see this level right here, 100.50. This is a key level we've been working with a lot. 100.50 is our previous resistance. That's where the next level, if the dollar does drop down, that's the next level we're going to see some serious support. And it might not. It might continue to rally, but long term, I believe we're still going up. All right, and even on the daily watch, let me just zoom in, guys. It's got like a really nice bull flag forming on lower time frames as well. You guys can all see that right there. So a really good strategy with this kind of pair, guys, is if I'm just going to draw it out. Let's just say the daily candle closed right here. Okay, you see how, and it's not always going to happen, right? But this is kind of like an if you see and this can be applied to really any pair, guys. So just bear with me a second, okay? For some reason. Okay, there we go, deleted. Okay, so the basic way to trade, guys, I'm just going to go off on just a little tangent for the new people in here. I like to trade breakouts on long-term time frames, okay? A breakout is when we have this resistance level that we were maybe expecting price to hold at 150. Once we broke through it, we're waiting for the retest, okay? So we're waiting for, and you never know how big the structure is going to be, right? So this is kind of like it made a retest right here, but now price action is showing, okay, this is actually a little bit bigger structure than we thought it was. All right, so now let's just say the daily candle closed just like that. That's almost like a textbook push to the upside. That's like you have such good risk to reward to buy this pair right here. If it were to close like that, right? It's still open for the next almost 24 hours, so anything could happen. But I'm just saying if, guys, if tomorrow you guys see the daily candle on the dollar index closes, you can buy the dollar index. You can actually trade this pair. You can buy and sell this. Or it's not a pair, it's just a basket measure. It's just an index. So what this is, guys, I'm just trying to tell you. So if it breaks through, this has been just a retest. This structure has just made a very long retest. All right. And then this is a bullish engulfing candle. And so I would put a buy stop like right above the previous high of the last day and catch the push up. All right. And then just continue, catch that all the way up to 103 and then, do whatever at that point. But I just wanted to show you guys. So some of you guys are wondering, like, how do you look for trades? How do you know? I'm just working off key levels of horizontal support and resistance. As well as, there are times I use Fibonacci. There's times I look at the moving average. There's times I look at the daily pivot points, right? But a majority of my trading style is based off of just horizontal support and resistance and price action, the way the candles are actually forming, the way price is moving. All right, head and shoulders, flags. Those are pretty much, pennants, flags are probably the two. Flags and pennants, right? They're the same thing. That formation, this formation right here, bullish and bearish, is such a powerful formation. You can make a living just off of trading flags, but then it limits your opportunities. So it's good to have, a bunch of different strategies in your arsenal. Let's move on to Euro USD, guys. Oh, we have a question in the chat room. Gideon, welcome, my man. I have not seen you in here before. Welcome. You said the blue and red line are the moving averages or the envelope. They are the moving averages. The red one is the 100 SMA and the red one is the 200 SMA and the blue one is the 100 SMA. Now, I don't necessarily have time on this webinar. If you're in the premium group, I show you guys on, I haven't showed you guys on the daily live sessions that I do with you, but I have a strategy that I use that I make calls on in the premium group based on lower time frames and the moving averages. But that's a scalping technique. It's very, very fast paced. So I don't give out too many calls like that because it requires, I don't want people to miss it. If it's, get in, catch only 20 pips, if you miss looking at that signal by 30 minutes, you might miss that 20 pips of that move. So as a signal provider, it's better to give out, position signals and breakout signals rather than just like quick scalps here and there. So on Euro USD, guys, still biased to the downside, hardcore, right? Like this is probably going to offer one of the better risk to rewards this week because not only is the dollar gaining strength, okay, but we also have the European Union not looking very good, right? And it's more of the uncertainty, right? It's because of all this hoopla with Italy and everything, investors are scared. That's really what it is, guys, because you have to understand the reason the markets move up and down is because people are buying and selling, right? You're buying one currency and selling. Sometimes people forget why the markets even move, period. So if people are sell off on the euro and people are buying the dollar, it's going to make, set up some opportunities for euro dollar quite nicely. Now, you guys know I've been talking about parity for a while, right? I've been talking about this pair going down all the way to 1.0 for a while. And I think we could reach there within the next month or two. Honestly, guys, I think we'll touch it very quickly. Yeah, I mean, nothing too much really to be said about that, guys. I mean, this pair is really easy to trade, right? We're going to wait for our support to be broken. Very simple, guys. This is great risk to reward. This is the time, you're waiting for good opportunities. This is a good opportunity. All right, we're waiting for support to break, and then we'll continue selling again. If I'm breaking up, guys, it may be my connection. I apologize. This is recorded, though. I will put it on. We'll of course put it on YouTube and give you guys the link to rewatch it if it's breaking out, so that way you can watch like a non-choppy version. So it's very, very simple, guys, but definitely biased to the downside. We did have a lot of bullish momentum in this pair last week. All right, if we look at this on the hour, let me clear out my marker. All right. Last week we were we were ranging quite. What's going on here? Oh, sorry guys. I hate when I don't have my mouse. That's why I can't do anything without a mouse. Okay. Somebody asked, can we short Euro USD yet? It would be an aggressive short, but you possibly could. I mean, we all know the euro is going to continue losing strength, right? It's not, I mean, even tomorrow, right? When he actually does resign, I mean, that's going to maybe even be more of a catalyst for euro to keep falling. So, I mean, after a big move like this, guys, wait for the pullback. It's actually already made the pullback up to S2 and then sell, right? I mean, look at, and we broke through the range. You guys see this range that we're in, right? Euro USD was very, very range choppy last week. Okay, that was the zone that we're in. Look right here. Look what just happened. We broke out of the zone. Let's break it down. This is like your classic textbook retest. Now, keep in mind, it's Sunday. The market's just opened, okay? If you're going to sell right now, expect some volatility, right? It could come back all the way up to S1. It could come back up to the pivot point. But I don't think we're going to make new highs this week, guys. There's not enough momentum behind this pair to make new highs. All right, USD chafe, same thing. Opposite of Euro USD, guys. It's the complete opposite of Euro USD. All right, so that means we're looking at buying opportunities this week, guys. So this zone, sorry, it's not a good marker. This zone, this range we played in all last week. But I told you guys, I told each and every one of you guys specifically, I said this pullback is expected. Like on Euro USD, trades that we were in, right? These pullbacks, how I told you guys all last week, I'm biased to the downside, but it doesn't necessarily mean it's going to happen that day or that week, right? When I say I'm biased to the downside long term, you have to understand what long term means. Long term doesn't mean in a couple days, a couple weeks. So I told you guys a pullback is expected. We talked about how this drop right here, okay, we talked about how this spike was two reasons. It was, I believe it was people taking profits from their shorts, right? If imagine long-term traders, guys, institutional traders, billions of dollars of people's money that sold up here. Even though a lot of people lose money, there are billions and billions and trillions of dollars being made from sells on the Euro USD, okay? So when price gets down here, and if you're a millionaire or billionaire investor, right, you're taking things seriously. Every single thing that's coming out. The economic calendar very well. You probably are. If you're risking millions of dollars on your account, then you're going to be more. You guys know what I mean. You're going to be more in the economy and things like that than somebody that's risking a side couple $1,000s or whatever, and not trying to make a living off of it, right? So those type of people, they knew that the referendum was coming a couple days before, right? Because they follow news, they read about it. So this is them closing their positions because of uncertainty. They don't know, yes, the referendum is expected to fail, but it could go up. So, the more cautious, the more conservative traders and investors took their profits in this area down here, and that's why it continued to creep up. But you guys can see I told you guys long term, don't worry, it's going to keep going down because the dollar is too strong right now. The dollar is super, super strong. Let's keep moving, guys. Pound dollar. We got a couple things in here. I personally believe, guys, that the pound dollar we can probably look for opportunities to sell this pair now. But I personally believe if I had to pick any of these pairs to trade, I'd probably be looking at this one the least. It's been choppy for a couple weeks, all right, and then finally broke out last week of its range that it was trading in. We had been looking for buys. We actually had gotten stopped out of a buy last week. Or maybe it wasn't last week. Maybe the week before last. Oops. But we were looking for a buy in this area. I don't know exactly where we bought at. But I know if you guys remember, we got stopped out by literally like 3 pips. And then it went all the way up to, I think it might have been right in here, where it dropped down to hit our stop. We had bought somewhere in here. So stop losses were just a little bit too tight, but ended up going where we wanted it to. Pound yen. Pound yen is still going to make new highs, I believe. I don't think it's done yet. Because remember, pound yen, the yen, people sell. Okay, remember, people buy gold and the yen when there's uncertainty, right? You can consider like yen very similar to gold. They're treat it as a safe haven, right? When there's uncertainty in the markets, expect gold to be very strong, expect the yen to be very strong, okay? So if that's any sort of clue to you guys, if gold's not doing so good, the yen isn't going to be doing too good either. So I believe that the pound yen is still not done making new highs. I think we'll easily see the 145, 146. Yep, Waleed. Yep. So in the premium group, I told you guys can go and look at the message. I said it's up to you guys. You can set your stop loss to break even or take your profits. But so I definitely gave you guys a warning, right? It's totally up to it's your guys' risk to keep trades open over the weekend. But I try to be very transparent and give you guys the decision to open it or not, or to keep it open or not. Let's move on to AUD USD. Kentrell says 146. Welcome, Kentrell. Never seen you in here, my man. Nice to meet you. You said 146 on pound yen. At least, I think it's going to touch at least 146. It could go higher. I mean, we could see something like 150. I mean, we could see some crazy rally out of this. This is a very strong, I mean, we look at it on the daily, it's in a very strong uptrend. It's not ready to go anywhere yet. It's not ready to go down yet. But you guys know this and USD Jappy, I've been saying all for probably 2-3 weeks now. I've been just saying buy the pullbacks. In Euro USD, right? Sell the pullbacks. So AUD USD, it's seen some major resistance in this area from the previous lows right here at about 74.50. I still think we're going to keep going lower, guys. If gold goes lower, AUD USD is going to go lower. So, again, look for opportunities to be selling this pair. This has got a trend line on it. I don't know if you guys see this trend line you could actually be working on. Kind of playing off of a little bit. Look at on the 4-hour, guys. Go on a higher time frame. This one's a little bit rough, but it works. This area, right? So you guys see this area. And again, it's always a zone. You guys might be wondering, like, why don't I draw my trend lines perfectly? It's just an area. So we're making kind of like this impulse up, or not impulse, consolidation period moving up. wait for a break of this trend line, and then sell. Break and close, confirmation, right? Confirmation means not just a break, but it needs to break and close below it, okay? NZD USD, very similar, right? It's playing, kind of has a different trend line too. This general zone. So we've got like price right there, and then we also have this zone. Let me show you. You can kind of see right there, guys, right? So once this area gets broken, then just continue the rally, right? Just keep on remember, guys, the trend is your friend. I can't tell you how important that is. Like long term, if you just trade with the overall trend of things and you look for confirmation, then you can't go wrong. You really can't go wrong. Part where people go wrong at is it's not, you have to really understand that the analysis usually isn't wrong, right? When you do analysis or you do a trade, how many times have you done analysis and you're like, oh man, if I would have just kept the trade open, or if I would have, just trusted myself and not let it close it early, or if I would have, lowered my risk so I could have afforded to have a bigger stop loss than that and that. So it's usually more of just like your equity and how much you have risked at the time that people blow their accounts or blow money before they can even see the profits. So it's really simple, guys. The technical analysis is pretty easy, especially right now. Price action is pretty good. Markets are pretty trending. So USD Jappy, same thing with USD Jappy, just like GJ, right? I think USD Jappy is going to continue to move higher. I mean, we look at on the daily, these purple lines that you guys see going through my charts, this is their Fibonacci levels. I use different time frames, but you guys can see, I mean, I use different fib levels on different time frames depending on the pair, right? To me, it just has to make sense, right? If the analysis makes sense and you can be like, yeah, I can see why you're doing that, then that's all that matters at the end of the day. So we have this big, we have the 2015 high to the 2016 low. All right, now we have a 50%. That's a very key level on such a large time frame. All right, we've already broken through that. All right, we haven't touched the 61.8, which is 115.47. So I think we'll at least test 115.50, test this resistance in this area before maybe seeing some exhaustion, back down. Because remember, nothing moves straight up, nothing moves straight down, but we are still in a major uptrend on this pair. USD CAD, guys, USD CAD I think is going to start moving up this week. That's just my personal opinion. Remember, also, this is a little bit different correlation, okay, guys? But USD CAD and gold have a interesting correlation, and I don't know if maybe it's right now. It's something as a full-time trader, guys. You'll notice if you don't jump around, if you stick to, like, you guys that know me, I stick to just these pairs on the right? I don't have Euro CAD or Euro GBP or some pairs that other people trade, but it's because I want to learn them like the back of my hand. So sometimes you'll start to notice trends, but they don't always last forever. So that's what I just wanted to say. What I'm about to tell you guys, it's not like a forever thing. It's just something I'm noticing right now, the past couple of weeks in the markets, that USD CAD and gold are kind of doing a little bit opposite of each other on lower time frames. You can see USD CAD is creeping up. Gold is obviously a lot more volatile. It's moving down a lot quicker than USD CAD is moving up. But this is just a long-term trend, something that I have noticed. Okay, guys. So also just on a technical level, right where price is at right now, we can see Friday's candle failed at this zone, the 132.70 level. All right, I'm going to wait for this daily candle to close, but if this daily candle closes just where it is or higher, essentially it just needs to be engulfing, right? This body of this green candle needs to engulf this red candle. But if we see that happen, then I would definitely be a buyer on this pair. And oil, I'm not touching oil right now, guys, just because of OPEC actually agreed for their first time in, I think, almost 9 years, guys, of slowing down production or coming to an agreement to slow down production, cut production a little bit. So obviously I think long term the demand for oil is going to increase. So I think that we will see this prices move higher. But I explained this to the premium group last week. A lot of you guys sometimes ask me why I do analysis on gold, but I don't recommend like trades on it or take trades myself on it. It's because I'm still learning. It goes back to all these, being able to learn these pairs like the back of my hand. I'm going to probably monitor this pair and do analysis on this pair for 6 to 12 months and trade, on a demo account with it while I'm learning how to trade it. And then once I'm ready, I'll start trading on my live accounts just like I do all the other pairs. But that's pretty much all I have, guys. If you have any questions, here we go. Waleed, you said, is it recommended to have a trade open over the weekend? That is totally up to you. Everybody is different. There's over 7 billion human beings on this planet. So everybody's risk appetite is going to be different. So, sometimes there's going to be good opportunities to leave a trade open over the weekend. Sometimes there aren't. I mean, you saw this weekend, I left the Euro USD trade open over the weekend. It on the MAM, right? It was in a couple pips of drawdown and then ended up going into, right? It opened up in profit, right? Other pairs aren't always going to open up in profit. Some of them, and sometimes the weekend won't do anything. You'll just see price open exactly where it closed off or close to it at least. Other times you'll see big gaps like this. So it's really up to you to make that decision, long term, if you're going to keep trades over the weekend or not. But obviously there is risk associated with that because we don't know what's going to happen. Anything could happen. What if World War III starts on the weekend, right? Obviously you probably have better things to worry about than your trading account if that were to happen. But you guys get what I'm saying. Brian, you said, do you see me calling a trade tonight? Or, I mean, it just depends. I listen to the market, guys. So I'll call a trade when the market is set up in a good position for us. I don't force a trade just to force a trade. And that's what's really going to, help you out long-term too. Don't force a trade. Don't trade just a trade. Just because the markets are open, guys. I know it's exciting, but you don't have to put in a trade right away. Kentrell, you said new to Forex, trading demo for now. You're 18. Any tips on how to learn more to open a live account? Well, Kentrell, I don't know if you've gotten a chance to read my Forex survival guide. I put together, me and my team put together a 22-page kind of just like crash course of where to start, a bunch of different resources. And you guys can find that on my website. If you go to positivetraders.us, you can register as a free member. Okay, you don't have to pay anything. Just register as a free member. But once you register as a free member, it'll give you the Forex survival guide. You can read it. It'll tell you like who we recommend to use as your broker. It tells you basically I basically kind of threw in there like a very quick version of how I became successful trading. That's pretty much it. The steps that I took, and it really just came down to self-discipline, and it's all about the risk management, guys. See in the chat room, we got some more. Mustafa, you said read the course on baby pips. Yes, baby. Well, yeah, of course. So Kentrell, if you go and read my Forex survival guide, it's going to point you to a website called Baby Pips. If you guys are also new to Forex, I highly recommend go to babypips.com. It's like there's a whole, it's like an A to Z on trading Forex. But you really just want to, the key to success in Forex is the drive, the willingness to be successful, being honest with yourself. That's really all it takes. When you get into a trade, if you can't even have enough discipline to risk 2% on a trade, you're going to fail as a trader. Point blank, straight up. I don't know any other way to say it, guys. You have to keep your risk low. That is the way you win in Forex. In the premium group on Friday, guys, Saturday morning, I specifically posted about this whole thing about low risk, guys. I want all of you guys, and if you guys are new too, and you guys didn't get a chance, if you're a free member and you didn't get to read that message that I posted in there, I want you to go and look up who Richard Dennis is, guys. Okay, he's just one example. There's traders like this, millions of traders out there. They just don't publicize themselves on social media. Okay, but Richard Dennis, he started with $1,500, about $1,500. And his win rate, guys, this is the key. His win rate was 30 to 40%. Get that, guys. Get that. So he would take 10 trades. Only 3 of them would win. Only 4 of them would win. He turned that into hundreds of millions of dollars, guys. And it all came down because he knew when when to catch big trends, right? How to trade. He knew when to use the proper risk, right? You always use proper risk, but he knew when to compound his trades. He knew, and you can only compound your trades. You can only do things like that. You can only add on to your trades and build your equity if you have low risk in the beginning. It only takes one bad trade to blow your account. And I gave you guys this example on Friday that I could be the best trader in the world, right? I could give you guys out of 100 trades, 99 of them could be right. But if you can't manage your risk on your trades, it doesn't matter how good of a signal provider I am. It's only going to take one bad trade, two bad trades, X amount of trades to blow your account. But that's it, guys. That's really it. Like it's really, some of you guys don't like hearing the truth sometimes. The truth hurts, right? But I know 99% of the problems that I meet when I'm teaching traders, I've taken a couple people under my wing and mentored them over the past couple months, and it always comes down to, it's just having to be honest with yourself and just keeping the risk low, right? I know it can get boring. I know it can be like, oh, I'm only growing my account 5% a month, 10% a month, but that's trading, guys. If you're going to get into trading, you have to know what you're getting yourself into. It's not this like magical world where you turn $1,000 into $1 million in 6 months and do whatever you want. Yes, there are some people out there that have that happen to, but you have to keep your risk low, guys. That's what it comes down to. So please, guys, look up Richard Dennis. Go get some inspiration, some motivation, guys. A lot of you guys like overthink and get really emotional about trading when that's not really what it is. It's just really other people that skew your guys' perspective. And all these groups on Facebook and Instagram and all these places that you see, all they do is just post a screenshot of profits, guys. That is nothing. Okay, the grass is not greener no matter where you go. My signals are just as good as somebody else's signals that has a good track record. At the end of the day, it just is about your risk. View on gold, Mustafa. If you didn't catch the beginning, I thought gold is still going down to 1150 long term. But guys, that's pretty much all I have. I'm sorry to get off on a tangent and give you guys a little motivational speech, but sometimes I think that's what you need to hear, right? Because trading can be really, really lonely, guys, and it can be, if you are not risking the right amount, if you're over risking, then it's going to become like this big, like emotional, like angry, either you're really happy sometimes or you're really angry. And that's not the way trading should be. You shouldn't even worry when you're in a trade. Like every time you enter a trade, if you have to check on your trade every couple minutes, that means that inside, psychologically, in your brain, you are not comfortable with that risk. It is too much for you. Okay, so that's why you're checking it. It's human psychology, guys. It's very simple. Okay, so be honest with yourself. If you can open up a trade, put your phone down, basically forget about the trade, bingo, you're doing it right. But if you have to open up your phone or open up your computer every 5 minutes and you're sweating bullets, you don't know what's gonna happen. You're like hoping it's and you're freaking out. It's only a matter of time before you blow your account, guys. So that's all I have, guys. I will catch you guys on Slack. Brian, you said, am I looking to open up a trade tonight? Possibly, right? If there's a good opportunity. You guys know I don't like to open up a trade usually, the first 6-8 hours of the markets are open, right? Let the weekend cool off, especially with this weekend. There's gaps. Let the markets cool off a little bit. And then let's hit it hard, right? We have a whole another 5 days to make, actually 6, right? Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. So just opportunities, guys. Don't force a trade that isn't there. Let the opportunities come to you. But you guys are all awesome. I really appreciate all you guys' support. I'll put this up on YouTube, and have a great trading week, guys.